Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haris Adam bin NORKHAIZAD.
And hi, my name is Firdaus bin Hirun AZAMAN.
Assalamualaikum and hi, my name is AMIRUL ARIF bin OTHMAN.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HAFIZ bin Muhammad SHAZALI, and we are from JBA2513F.
In this report, we will describe the company overall statistics, which include liquidity, activity, leverage, profitability, and market value ratio. This will be determined by the income statement and balance sheet of the companies from 2016 until 2020. Then, there is a horizontal and vertical study to separate the company and determine which one is the best to invest in. We also provide to understand the business model for selected companies. Our three selected companies for this assignment are DNO Technologies Berhad, Unisem, and Excelforce MSC Berhad.
Okay, we selected three different companies in technology sectors. The first one is DNO Green Technologies Berhad. The second one is Unisem, and the third one is Excelforce MSC Berhad. Next, we go to the company background for the DNO Green Technologies Berhad. This company was founded in year 2000. This company became one of the world's top light emitting diode LED manufacturers. This company is located at Lot 6, Batu Berenam FTZ, Fas, Melaka, Malaysia. For the stock name, it is DNO. For the stock code is 7204. This company has grown internationally with 6 different countries, including Europe, United States, China, Japan, South Korea, and also India. For the main activities, this company acts as a manufacturer for light emitting diode LED and also automobile light. The vision for the company is they want to become a trusted and reliable partner for its client. Today in the market, you can see the company offer LED products with the packaging under its own brand name called Dominant. For the Unisem Berhad, this company was established in 1989. The headquarters was located in Kuala Lumpur. Okay, the stock name is Unisem. The stock code is 5005. This company is becoming a global supplier of semiconductor assembly and also test service for electronic firms. This company has many factories globally, which include Ipoh, Malaysia, Chengdu, China, Batam, Indonesia, Sunnyvale, California, and also Wales, United Kingdom. Around 7,000 workers are contributing to the company globally right now. For the main activities, they are substrate IC packaging. They are providing mixed signal test service. For the third company is Excelforce MSC Berhad. This company was established in 1994. At that time, this company started as a leading supplier of public display system for stockbrokers galleries. The headquarters was at Pusat Dagangan Filo Damansara, Petaling Jaya, Malaysia. The stock name is EFOS and stock code is 0065. This company also has received awards in 2019, which was the best return on asset. For your info, this company was listed on the ACE market in 2004. For the main activities, they are in development, provision and maintenance of computer software application for the financial service industry. Lastly, this company also develop mobile apps to enable share trading on the move in order to attract many generation of investors.
I will explain a very first analysis, which is vertical analysis, or also known as common size statement of financial position for our three chosen company. Basically, vertical analysis is used to see whether the trend or relative changes in company's account within a period of time. The formula to calculate common size is the item will be divided by base item and then we times with 100. As for example, based on the table above, cash and bank balance will be divided with total assets and times with 100. As for the beginning, the table above shows the common size analysis for our three chosen company, which is DNO Green Technologies Berhad, Unisem Malaysia Berhad, and Excel Force MSC Berhad. As we can see, the total current assets for eForce MSC Berhad is increasing from year 2017 until 2019. Compared to other two companies, which is DNO Berhad and Unisem Berhad, their current asset resulting to decreased trend for the continuous year. Next, as for the non-current asset, we can see that the total non-current asset for DNO's Berhad and Unisem Berhad has an increasing figure except for Excel Force Berhad. This means that the company has increased or brings non-current asset into their business. Furthermore, we can see that there is so many unknown figures on each of the company. This is because some of the company only focusing on their account payable and do not have short-term or long-term borrowing. However, we can see that DNO Berhad and eForce Berhad total liabilities is decreasing from 2017 to 2019, which is good for the company as they are not having too much debt. Last but not least, the total equity for DNO Berhad and Excel Force MSC Berhad is slightly increased from 2017 to 2019, except for Unisem Berhad that have opposite result, which is decreasing figure from 2017 until 2019.
According to DNO Green Technologies Berhad Index Trend, the company has the lowest revenue compared with 4 years before. This happened because of the outbreak of COVID-19 started to rise. The company needs to stop the operation in order to follow the law. High demand for industry made the company revenue in 2018 the greatest among other years. Unfortunately, the company has no disclosed the cost of goods sold, or the gross profit remain the same as revenue because there is no cost of goods sold. The selling and administrative expense in 2018 has increased 36.331% compared to 2016. This expense does not generally affect the net income as the operating profit has been covered. The operating profit for 2020 was the highest among other years because the company raised 8.1 million ringgit of private placement. For operating expenses in 2020 has increased double from 2016. The net income in 2020 has the highest amount due to the excellent profit made. Based on the table, it reveals company net income in 2020 as the highest profit compared to the previous year. The strong growth of net income because of the anticipated growth in its revenue and earning from the capacity expansion at its facility in Ipoh and Chengdu. In terms of revenue, Unisem recorded a rise in 2017 at 3.97% because of attribution attributed to the higher sales, improved average selling prices, and the appreciation of the dollar to the right versus in the prevailing rate in the corresponding quarter a year earlier. However, the attribution has caused an increase to the cost of goods sold in 2017 and followed by the coming years. However, the percentage of COGS is still greater compared to the gross profit of this company, as operating profit in 2019 decreased to the lowest percentage compared to other years related to the company earning decline was mainly attributed to a lower sales volume across all regions and a higher deferred tax expense. Eventually, UNICEF financial in 2019 showed a drastic decline which made a net loss of 9.5 million ringgit in its financial year. According to the data statement above, the company revenue index indicates a slight increase by 8.64% starting from 2017 compared to the past year. For the next 2 years, total revenue decreased to 7.86%, and this is because the company launched a new trial concept that might affect consumer consumption on the system. However, the data show a sharp increase during 2020 by 41.35% compared to the previous year. Total revenue on that was 29.9 million ringgit, and the main factor the company managed to generate more revenue due to pandemic outbreak during that year, making the business more aggressive on IT solution provided as well as with better financial health. Next, the net income for the company consistently increased compared to the base year. The highest net income recorded was 2020 by 72.80%. However, the company began showing a decline of percentage for their operating expenses. The data stated that in 2020, only 72.42% and the lowest percentage compared to for the past 5 years.
On the table above, we can see an uptrend of the company earning per share. This explains that the company performance is distributing their profit to shareholders is excellent. Refers to the goals of EPS, the higher result should be best ratio. As we can see, the highest ratio recorded is in 2020, which is RM0.0417. The value continuously rising every year to RM0.014 from 2016. In addition, the market value per share for DNO Berhad also increasing for the past 5 years. The price uptrend from RM0.1064 in 2016 to RM0.1749 in 2020. The price to book value for the company slightly increased from 2016 until 2020, which from 1.5 times to 14.16 times. The price earning ratio is to indicate the expectation of the market and see whether the company stock is profitable in future. As shown in the table, 2020 is the highest ratio among the other years. Unfortunately, there is a slightly decrease from 33.26% in 2017 to 20.38% in 2019 and continuously rise to 54.68% in 2020. This indicates that company able to gain profit from year to year. Furthermore, the price-cash ratio indicates extreme growth from 2016 until 2020, which is a total RM5.922 in 2020. The highest ratio was in 2020, which is RM49.4, while the lowest was in 2016, RM6.52. Lastly, divided yield ratio, there is up and down in result. The highest ratio was in 2017, which is 1.34%, and the lowest was in 2016, which result 0%. This means that the company are not able to gain return in 2019 for each of currency invested. Based on the table above, earning per share for UNICEF Berhad is in positive figure. However, there is a negative result shows in 2019 with negative RM0.0131, which means the lowest ratio compared to other year. At the same time, it indicates that the company is volatile and are not able to distribute their profits to shareholders as the value appeared negative. The market value per share for UNICEF Berhad maintained the same from 2016 until 2018, which is RM0.6814, and increased slightly to RM0.6877 in 2019. However, it continues to drop in 2020, which indicates the lowest ratio, which is RM0.619. Price to book value for the companies is show positive figure, which the highest ratio is more favorable. The highest figure was in 2020, which is 2.71 times greater compared to other years. We can see that the ratio is rising from 1 to 1.23 times in 2016 to 1.84 times in 2017. However, it is started to drop continuously for the next 2 years. Next, the company's price-earning ratio shows an up and down result. We can see that there is negative figure in 2019, which negative 164.89 times directly indicates the lowest ratio for the past 5 years. The highest was in 2020, which is 31.66 times. In terms of price cash ratio, the table above shows that there is a decreasing trend occurred. The highest price is RM15.38 in 2016, while the lowest is RM4.69 in 2020. Lastly, the dividend yield ratio for the company is positively increasing. As shown from the table above, the lowest result was in 2016, which is 0.97%, while the highest was in 2020, which is 4.06%, whereas indicate that the company are paying large dividends to their investor. Based on the observation above, the highest of company's earning per share is RM0.02 in 2016. On the market value per share was showing the lowest in both 2019 and 2020 at RM0.03, and the highest is at RM0.01 in 2016. It is shown that the price to book value ratio usually used to calculate a company's market capitalization based on the book value per share. 2017 recorded the highest of price to book value at 14.1 times. Apart from that, 104.8 times and 21.88 times has been calculated as the highest and the lowest in terms of price earning ratio at 2017 and 2016. The highest price earning ratio indicates that the company's stock is overvalued and the investor will expecting high growth rate in the future. On price cash ratio, the company of Excel Force has more cash and cash equivalents than current liability in 2016, 2017, 2018 and 2020, as the amount of price cash ratio is greater than 1. Lastly, dividend yield ratio shows that the company yearly rate of return in the form of dividend. The table shows the percentage of dividend yield ratio is fluctuate from 2016 to 2020, and in 2016 it has the highest yearly rate return at 3.36%.
At the end of our group analysis, we can elaborate that each company always needs the health of financial performance and a strategic planning for a long-term period for the company's sustainability. For recommendation, we want company to create a strategic planning as a long-term sustainability in the next 5 years or 10 years. And they need to have a good management in asset as will credit to company operating to be more efficient, and it will overcome an array of temporary problems. And the action for company to survive in the long run is always keep the company maintain the profitability and to be more confident and comfortable.